Bro, so this is one of the craziest tax strategies I've ever heard. So wealthy people leverage charities plus art to legally wipe out hundreds of thousands of dollars in taxes. So basically it works like, as a wealthy person, you can set up a private family foundation, and the money that you contribute to this foundation is tax deductible to you. What most people don't realize is you can not only contribute cash to it, you can contribute art to the foundation, and you can get a tax deduction that's way more than what you pay for the art. So for example, I can buy art for like $10,000, have someone else appraise it for $100,000, and donate that art to my private family foundation. And I get the write-off at the amount of the fair market value of the art. So I only paid $10,000 for it, but I will get a $100,000 tax deduction for donating it to my own charity. And guess what? I can still hang the art up in my house. Wealthy people have been doing this for years, and our people are just now getting put onto it. But a private family foundation plus leveraging art is an amazing way to save hundreds of thousands of dollars in taxes.
It's an amazing way to commit tax fraud, but don't let the actual tax law get in the way of a really cool viral video. No, what ends up happening when you donate any item that's an appreciating asset is, if it's over $5,000, you got to get a qualified appraisal, not some guy who says it's worth $100,000. You actually have to get a qualified art appraiser. One of my colleagues, I've had him on, done a lot of talks with him, was a tax attorney who litigated this very thing because the IRS knows that this is ripe for fraud. You also have to give up ownership and control. It's not like you get to just keep it in your house, because that's a strong indicia that you didn't give up ownership and control, and it has to be related to the exempt purpose of the actual entity that you're donating it to. So like a museum or something where in art where it's displaying art. So you might be giving it to something like a that's for the community arts or something like that, and I'm donating this item. It'll be its fair market value so long as it's being used. Otherwise, it's going to be the basis, which is in his example, the $10,000. So no, it's not as simple as he's saying. Yes, wealthy people do donate appreciated assets. There are AGI limits, and there are some specific requirements on what you have to attach to your tax return. There's an actual form called an 8283 you're going to have to complete, and you're going to let the IRS know, hey, I donated this item. Here's the appraisal. Here's what they think it's worth, and it needs to be absolutely airtight. Otherwise, you're inviting the IRS into your house. Don't do that.